And as far as the idea of how much oomph there will be to this market, I've said for years and believed it for years that this will go into the financial record books. The reason being is that the move from 1965 to 1980, where silver sold at monetary value of $1.29 per ounce to the record $50 on the one intraday market in 1980, January of 1980. That move was really primarily fear of the US dollar losing value or purchasing power. This time it's worrying about the US dollar losing purchasing power on a global basis. So if, 4 or 5% of the world's population could move the silver and gold markets the way it did in 1980 as a financial quote unquote crisis that was overcome by Volcker and high interest rates, the next time it'll be a worldwide phenomenon. So you will have, 20 times the participation potentially that you had near the end of the market in 1980s.
So, with the electrification movement picking up steam, combined with the fast moving artificial intelligence movement, the solar panel build out you've talked about, the monetary issues we're having, silver is clearly in increasing demand. And it seems like soon it could maybe likely be an unparalleled demand, something we haven't seen before. David, does the U.S. have a cogent strategy to ensure that they have enough silver to meet the demand at reasonable prices?
Well, not anymore. At one time, before 1986, we had what was called the strategic silver stockpile. And this silver was laying around as a strategic metal. So, you could use the word critical. I don't care. I'm not into semantics, but that's what it was. And then one of these senator types thought, well, what's all this silver doing over there? We're not using it for anything. We quit coining silver in 1965. Here it is, 1985, 2 decades later. What are we doing with this stuff? And so the Silver Liberty / Silver Eagle program was put into effect, and let's use the silver up. Let's give it to the mint. Let's let them make coins, and let's sell them to the public. And that's what happened. Now, after that started, I actually had a meeting with a certain senator I won't name in a Western state and explained what strategic meant and why it was important to keep silver in the stockpile in case of several things, war being one of them, because there's a lot of silver used for military applications. It's never, ever talked about, or very seldom. And he just blew me off, and that's okay. I mean, it's didn't hurt my feelings, but it was the idea that blew my mind. It was this just-in-time inventory idea that the United States has had for a very long time. It's more efficient. You don't have to, have warehouses and stockpile stuff. You just have such an efficient computer model that if you start running out of Cheerios at the grocery store, the computer tells the manufacturer that we need this much more Cheerios, and the manufacturer ships it direct to Safeway, and you keep a constant supply on the shelf. So he had that idea about silver. It doesn't matter. We just have just-in-time inventory. Whatever we need will be available. And I'm going to go on because the story is a little more interesting. So with that attitude that we just have all we need and that's just silver, when the law took place, you had to use domestic silver, which meant here's this big stockpile we're going to turn into coins, and anything further out into the future, we will have to mine from silver mined in the United States. Well, guess what? The amount of silver mined in the United States is pathetically small, and it was so small that it could not meet the domestic demand of silver for silver coinage. You got to remember, the vast majority of the public doesn't know anything about silver. They don't buy silver coins. They certainly don't buy silver eagles. It's only people that know what silver is and why they want to own it. So even with that, they were unable to meet the demand of silver. So they had to change the law that the amount of silver to go in the Silver Eagle program could be sourced from anywhere in the world.
Let's discuss silver investor sentiment and even volatility. we've seen both gold and silver move substantially higher in 2024, although with some significant volatility days, just like we saw last Friday. What do the higher volatility days tell you? And on the whole, do you see sentiment beginning to shift into a more positive light towards the precious metals?
I'll do the second question first. Yes, the sentiment has definitely changed among the Chinese primarily. The sentiment, it really is in the quote unquote surprise mode for the retail silver investor in the Western countries. Most of the West is selling back more than they're buying. They don't believe that this move is for real or sustainable. So they're kind of in the, wear me out mode. Look, I'm back to where I bought it. I bought it at 25, but the premiums are extremely high. I paid 30 for it. Now I can sell it for 30. I'm out, or I'm reducing my exposure to silver.
Right.
I know that from talking to most of the wholesalers that are really full with inventory. You can also see it in the premiums. They've come down substantially from where they were when silver was $5 cheaper. The reason being is there's a lot of supply. So it's sort of a bifurcated market as far as who believes in silver at this point in time and who doesn't. As far as the volatility is concerned, that's uncertain, which means we don't know what silver's going to do. Is it going to disappoint us for the 50th time in the last 50 months? Or is this a new paradigm where we are in a new bull market and it is going to be higher next year than this year, and higher the year after that than that year, and higher than that the following year? In other words, are we in a sustainable bull market? I believe that we are, but the markets has to climb that wall of worry with a lot of doubters left behind. Bull markets shake off a lot of bulls on the way up, and a lot of people that are shaken out right now or reduce their positions are looking at $30 silver as maybe that's it. That's going to be it. And even if it gets to 40, I'm not missing out because it'll come back down to 30. And all of a sudden it's at 40 and it goes to 50. And then they say, well, it'll pull back. I'll get in if it gets back to 40 again. And it never sees 40 again, or at least for a very long time. So that's the way markets move. It's typical climb the wall of worry, the doubters left behind. That's why it's really imperative to have a conviction and have a set amount that's right for you set aside. I've recommended for years 10%. That's 10% continual. So if your portfolio has gone up really well because you were pretty good at time in the real estate market and your net worth is X, and now silver is done nothing during that 5-year period and it's only 5%, you should adjust. You should sell some real estate or REIT or something and take that profit, move it into silver to balance your portfolio to that 10%. And that way, when things turn the other direction and real estate's not doing very well and silver is, you'll be able to have, let's say, a more balanced approach to the markets.
So the price action that we've seen in the last few months that has taken it as high as 32 and then fluctuated down, and it's been hovering around 30 for a while, up and down. It sounds like that's telling you, informing you that we are in a bull market. It's broken through some resistance levels. Do you believe that the current gold and silver bull run is similar to what happened in the early 2000s and in the 1970s? Do you see it being something smaller like the 2016 and 2020 runs? Or is there even a different time frame that you're looking at that to you seems more similar? And do you have a price level range from your analysis that you're pointing to over the next 6 to 12 months for silver?
First, I see it as a secular bull market. It's taken a long time to get, both gold and silver up to these levels. But regardless, they're there now. We're seeing a high level consolidation in both metals, which is typical in the commodities futures markets. We call backing and filling. In other words, building a new base at a higher level before it goes even higher. And as far as the idea of how much oomph there will be to this market, I've said for years and believed it for years that this will go into the financial record books. The reason being is that the move from 1965 to 1980, where silver sold at monetary value of $1.29 per ounce to the record $50 on the one intraday market in 1980, January of 1980. That move was really primarily fear of the US dollar losing value or purchasing power. This time it's worrying about the US dollar losing purchasing power on a global basis. So if, 4 or 5% of the world's population could move the silver and gold markets the way it did in 1980 as a financial quote unquote crisis that was overcome by Volcker and high interest rates, the next time it'll be a worldwide phenomenon. So you will have, 20 times the participation potentially that you had near the end of the market in 1980. So there's no telling how high the market could go in paper terms. I could be wrong, but that's what I believe, because again, as the dollar's failing, it won't be a U.S. phenomena only. It will be a global phenomenon. I need to get out of dollars. So the yen's failing. And so all currencies are really tied to the dollar, even though the BRICS is alive and well and has mitigated their exposure to the dollar to some level. The amount of debt in the world is primarily US dollars, which means it'll still have to be paid back in US dollars. And that means that the dollar is still king for a while until the ultimate quote unquote failure happens, in which place you have to implement a new system. And that's where this default comes in, probably during war times, where, because of war and those nasty, opponents of ours caused the failure of the currency, which of course isn't true, but in the minds of the public, it makes sense because the rhetoric that comes from the mainstream financial press or mainstream press convinces them that it was the bad guys that caused the problem in the currency markets, not us. We're the good guys.
Well, that's quite the picture for the metals that you're painting there. It's, if we had a similar move to the 2000s, which was less than the 70s, that would be amazing. But you're believing in your thesis that this move is going to be even bigger than the 70s. And so that's because it's going to be a global phenomenon. Some analysts believe that the silver equity prices remaining relatively low despite the silver price run up that we've seen in the last few months is an indication, as you pointed out earlier, that the silver price rally isn't sustainable, or that the all-in sustaining costs are just too profit prohibitive. Others believe the equities are historically undervalued. So what is your silver mining equity thesis, David?
Well, we've written about it in our premium service, the paid subscription. And we admit that during the highly inflationary times, the mining business isn't necessarily the best business to be in. But there's a subset to the mining business known as the streaming or royalty groups, and those have a far superior risk to reward profile and should do extremely well because their risk to the inflationary environment is pretty much mitigated. Having said that, there will be, especially with higher margins, a lot of leverage. I did a paper years ago on leverage in the mining sector. And the higher your costs are, the more leverage you have. So let's say you have XYZ mining, and XYZ mining mines silver at $30, and at $30 you break even. You really should even be in business. But as silver goes to 40, you've now got a $10 margin, and 10 on 30 is a pretty big percentage. Whereas a company that mines silver at, let's say, $10 an ounce now, it has a $20 margin at $30, goes to 40, it's only got a $30 margin so it's a lower percentage gain. I hope you're following. It's simple math. But you actually have more leverage in a high cost producer than you have in a low cost producer. So it's something to bear in mind. It's just one of those parts about the mining industry that most people don't know about or analyze properly. Doesn't mean you should buy a bunch. Really, let me restate it. I was going to say it doesn't mean you should buy a bunch of silver juniors now. I'm not favorable to the junior mining sector at this point. There's a time where there will be, and if you know the future and your crystal ball is perfect, certainly buy the juniors that you know are going to do well. But there will be a time if this rush to gold that I'm outlining, this rush to silver that I'm outlining is correct, near the end of the market, anything with gold and silver in its name will do well because there's such a small market. If people are worried about a currency failure, gold or silver are going into new all-time highs, real all-time highs. Let's say, to get to a real all-time high in gold, you're going to have to be somewhere 15 or 20,000. Is it going to get there? I don't know. I sort of doubt it, but I don't know. But even at the $10,000 level, people might be panicking into buying anything with gold or silver. So they'll look for cheap stocks. And a lot of these cheap stocks will be nothing more than moose pasture with a fancy name, silver, blue sky silver. I don't know. And these companies will run because people that are late to the party will see cheap stocks that have gold in them or the gold name in them. And that will entice the public. And they won't do their analysis, even though with the internet they probably could. They won't do due diligence. They will be in an emotional state. I've got to buy gold. I've got to buy it now. How do I do it? Oh, there's this stock that's only 50 cents. And those stocks will run. They'll go 50 cents to $5 in 3 weeks at the top of the market. It's very tricky to time those things. And most of them don't have any real true value. But that doesn't mean they won't pull a GameStop because everybody's in that meme and say, hey, this gold stock's going to do better than GameStop, that kind of thing.
So you do see a mania phase coming.
Oh, absolutely.
Yeah.
I think it'll be a mania that makes the 70s mania look like a warm-up. You've
That's
got
amazing.
4 or 5% of the population panicking about how the dollar is going into the toilet, and now it's the dollar going into the toilet on a global basis. It'll be huge.
Yeah. So J.P. Morgan famously once said that gold and silver are money. Everything else is credit. John Exter, a famous economist in the early 1900s, created something called Exter's pyramid. His pyramid, which is inverted, was and still is used for visualizing the organization of asset classes in terms of risk and size. And at the bottom of the pyramid is gold. And then as you go up the pyramid, it's more risky assets. How can Exter's pyramid be fundamental for the typical investor to gaining a greater understanding of asset valuations and markets in today's economic environment?
Well, thanks for bringing that to my attention. I'll take credit for it. I really believe this to be true, or I wouldn't say it. But I was probably the only one in this cycle that brought the Exter pyramid to the fore. I remember the first person in my genre that I brought to the attention of the Exter pyramid was my friend Jay Taylor, and Jay's been in the business longer than I have. And then it kind of caught a lot of people's attention. But the idea is it's called a liquidity pyramid, and so what it means is, you might have a 100 million in real estate, and you're very well off, but your equity is only 50%, so you've got 50 million in equity. But none of that's liquid until you sell it. Liquidity means you can write a check for it. It's cash. You can have bags of cash and you hand them over to, the grocer or the car dealer or the real estate agent. That's liquidity. So the liquidity pyramid goes from what's very illiquid, like derivatives, junk bonds, very illiquid, to more liquid things like, treasury bills, very liquid, to cash itself, which is the US dollar in paper form. That's as liquid as it gets for 99% of the population. Not even 1% really owns gold. But gold is the most liquid. It's more liquid than the dollar because it's available everywhere. And the US dollar paper note is available very widely. I mean, if you go to Argentina or Venezuela or any of these countries you mentioned earlier, Gary, that's their go-to investment. They take their pesos and change it for greenbacks. And there's an official rate of exchange, and then there's the street value, which is different. But still, the dollar's still failing. It's just failing less rapidly as those other currencies. Coming back on point, gold, according to the Exter pyramid, is the ultimate liquidity. And silver is really beyond that. But he never said that. He was a gold guy, not a silver guy. And so what happens is the more you want to be able to protect your wealth, save, make sure you maintain your wealth, the more you go down the pyramid toward the US dollar and into gold. That's why I said at the end, you would see gold and the dollar move together because the dollar is the next best thing to gold versus other currencies, and it will show itself as being very, very strong. And there's these debts that have to be paid back in US dollars that can only be accounted for in US dollars. So you can print all the pesos you want, but you still have to convert it to US dollars. So instead of converting to 100 to 1, now you got to convert 150 to 1, or your outline earlier with the Japanese yen. I could print the crap out of the yen, but I got to print a lot more in order to buy a dollar. So it's a mess, and it will self adjust at some point. Even the banks do nothing, and they're unable to implement a CBDC in time. You could still have a currency failure, which would really be a mess. And I'm not saying the CBDC is the answer. In fact, in my book, it's not the answer. And gold and silver are not the answer either, by the way. And most people have never heard me say that before. It will be a transition point, but it will probably not be the ultimate go-to unless there is a implementation on a, let's say, nation-state basis or a global basis where we go back to, let's say, Bretton Woods 2 and we reestablish a sound currency basis to move forward. But I don't have high hopes for that taking place.
Well, I appreciate how you've articulated the picture that we're in, and giving some education to some folks so that they could see a broader picture of what's happening with the currencies. David, you've embarked on a new film, I understand, entitled Silver Sunrise, which breaking free from the stress, fear, and control of money. Would you tell us about your silver-focused film project?
Yeah, it's really not silver focused, although silver's in the name, and that's fine. But it's about, silver reflects light than any element known to man, and it reflects heat better than any element known to man. And it seemed appropriate silver sunrise that we're looking over the horizon into something new. But it really has to do with the way the system is set up and how much of a control mechanism it is by the money masters. And now we need to break free into a new system that's different than a CBDC, where we have the consciousness to bring that power back into ourselves. And it really is more or less an inside job, kind of a look at money that most people never consider. But what is true wealth? The true wealth is us individually, what our gifts are, what our intrinsic spark is, what our higher selves are. And really, if you have enough internally, the external will pretty much manifest. I know this sounds a bit new agey. It's not meant to be. And I'm not a new ager. But the idea is that we're looking at this upside down pyramid again. We're looking at Maslow's hierarchy of needs, where you need food, you need water, you need shelter, you need clothing, you need a job, you need all these things. And once you've achieved all those things, going up the pyramid, you get to the top where you can get self-actualization. You've got the free time and the money to put that time, the most valuable commodity any of us have, regardless of our net worth, is time. And so you have the time to put into yourself and become self-actualized, which, your meaning, your purpose, what you can contribute, all those things. Mm-hmm. I flip the pyramid upside down and I say, why don't you start with your self, your purpose, your meaning, your being, your higher self, and with that as your basis, then you move outward from there and you automatically more or less gather what you need, not necessarily what you want. So I think there's going to be a shift in consciousness to get to the next system. And my goal is to try to awaken enough people to put it in our hands rather than the bankers' hands. I know that's very idealistic. I know it's unlikely, but these ideas whose time has come need to be put to the fore for people to understand that we really do have the power and they don't. I mean, just take a quick thought experiment that there's enough silver dispersed among the citizens of North America where for some time we could just trade with silver alone outside of the banking system. What do you think that would do to the powers that be? Is that the case? Probably not. But I'm giving you the idea that I want to instill the real purpose of my life, in my opinion, and that is to turn this thing upside down, put the power of money back into an honest system. I mean, my mission statement is to teach and empower people to understand the benefits of an honest monetary system. If we could get that mission statement achieved, we achieve a much more harmonious, peaceful, engaging, cooperative system than the warmongering, greed rules situation that we now live under.
Well said. Really well said. This has been a fantastic discussion. And before we wrap up here and I ask David our final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive this free gift on us. Also, I'm positive that you've enjoyed this conversation with David as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video. So, David, in wrapping up our discussion, I want to ask you a final question about something you were kind of talking about there, dancing in the weeds a little bit about, and that is silver as currency. Silver really is a real store of value. It has endless uses. It's always energy related base value. It even had currency status, as you had pointed out, for thousands of years. And in the US, it was currency until the dollar became convertible to gold. It's been a long time in this country since silver was considered currency. But because of our runaway deficits and debts and the dangers that they present, states have once again been trying to point to the Constitution, where the founders outlined that gold and silver are the real money, not just a collectible, as they want us to believe that it is today. So, David, in your analysis, what's the probability that at some point in the near future, silver will once again regain currency status in some form or fashion? And how do you see that unfolding?
Well, two ways, and they both exist right now, Gary. One is to have a depository that has the inventory of silver and or gold. You can do them both, of course, and you back a debit card with it. And those exist today. In fact, I have one in my wallet as we speak. And that means that I can go to a gas station, I can put my card in, I can pump my gas, and I actually debit out of my account silver, but the silver is converted from silver into fiat basis the LBMA afternoon close or fix, and that's how it's paid for. So from the merchant side, it's transparent. They don't even know that I've debited out silver, which makes it very convenient.
Mm-hmm.
The other way is through the blockchain methodology, and there are several in the blockchain that have a similar feature where you actually debit out silver and or gold to make a payment or trade peer-to-peer. I've taken payments for the Morgan Report Premium Service from the Load Project, which I am an ambassador for, and so I've taken Load tokens, which are the basis or based in silver or gold. Well, that's the coins, the AGX and the AUX. And I've taken that as payment. And that, I think, is probably the more likely scenario going forward, where there'll be more and more asset-based crypto or blockchain currencies available, so that it's very much similar to what we do now with Apple Pay and Venmo and all these apps like PayPal that you use at the store. It'll be the same thing, except you're doing it with the gold and silver rather than doing it with the fiat currency.
Outstanding. David, thank you so much for coming on to the Metals and Miners podcast and for being so generous with your time, your analysis, and your ideas. It's been amazing to spend this time with you. Would you please share with the viewers Any final thoughts that you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Certainly. For the paid and the free service, just go to themorganreport.com. If you're interested to get on our mailing list, just scroll down the landing page at the bottom. You can sign up for free. If you're interested in subscription service, just hit the subscribe bar, and you can read about it. And I'm giving a free consultation to anybody that signs up for the premium service, so they can have a half hour with me, one-on-one, or their wife, or their company for that matter. And if they decide after a month or two that the Morgan Report really isn't for them, they can still have that half-hour consultation. And then for the movie, which I am, putting like kind of my last effort into, as far as trying to do a massive wake-up call, it's at silversunrise.tv. You can see some of our trailers with the master himself, G. Edward Griffin, wrote The Creature from Jekyll Island, Mark Passio, Foster Gamble, Ellen, who's written The Web of Debt, many more to come. And if you want to get involved and give us some suggestions for who you think should be interviewed for this documentary, let us know. So 2 things. One is themorganreport.com, and the second is silversunrise.tv.
Well, fantastic. And I'm going to put up all of that information on the video and put it in the description of the video for everybody. There'll be links there. Everybody needs to go follow David and the Morgan Report. He's a very overflowing wealth of information. And during this time where, folks are getting bucked off the bull, now's the time to be accessing this type of information to be able to stay on and ride it to where it's going. I look forward to having you back on, David. Thank you for being here with us, and everybody else, thank you for watching. I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History nor Economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive this free gift on us. Also, I'm positive that you've enjoyed this conversation with David as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video.